everyone. So 1 minute past the hour. I think there's one or two people still arriving, so we'll just give people a little while to settle down. I shall be watching the questions queue and the chat log as well as we go, but if I miss anything, Carol will jump in and remind me that I've missed people. So any comments and things, please jump in there, and then Carol can release your line. As Carol says, if you are on telephone, make sure you click the thing that says use telephone, otherwise we get you twice and we get horrible sound effects. Good. So welcome to this week's review. I've got the agenda up on the screen based on what we talked about last time. Remember, last time we went through what were the kinds of relationships that we were interested in, and we identified a few interesting ones to think about. Some of them are already in the model. What I've done is I've tidied up a few diagrams showing what's there now, and we can work out what to add, what to change, and so on. So just to reiterate the bigger picture. So when we first sent the initial slides around, we showed one kind of relationship, and that was the relationships between companies that, by definition, are incorporated by the issuance of shares, because these were relationships based on voting shares. This is control plus ownership. And if the owner of those voting shares is itself a company, then you have these hierarchies of parent, subsidiary, part owner, and so on. So there's two obvious questions there. One is, what about if the owner is not a company? So we have control ownership, but it's not actually another company. Another is, what about shares that are not necessarily voting shares? So shares of any class at all, which would include voting and non-voting shares, what we call beneficial ownership. And in the model as it stands, we have a term called ultimate beneficial owner, which has a few interesting questions around it that I want to cover. Now that's still all just share-based, so equity-based, so clearly only applies to the ownership of something which is itself a limited company, because the definition of those is that they have equity. What about other kinds of entity? For that matter, what about other kinds of entity that have equity, like equity in funds and so on? And then we have other kinds of control, managerial control. Part of that, of course, is the ability to appoint board members, which, as far as we can make out, does follow from ownership of voting shares, because it's those votes that give you the ability at the AGM to appoint board members. Then we talked about influence, what other kinds of influence exist that people need to do due diligence on. And then there's some other interesting ones, like where there's some relationship, such as where there are the same people on the board of different companies. Not sure how to model that, so I'd like to get to the bottom of that a little bit as well. And other forms of influence. And then finally, we've got elsewhere in the model, in the securities models, for debt, for example, we have guarantor, we have counterparties in over-the-counter trade relationships and so on. We have reporting entities, we talked about those last time. So those are the kinds of relationships we wanted to look at. And I thought what I'd do, I want to show a couple of things first. So I'll start by just refreshing our memories on the diagrams that we did show in the original slides at the beginning of this series of subject matter expert reviews. And this was the share ownership based relationships, where the owner of the party, which is the shareholder, is itself an incorporated company. So we start with the very basic thing, and I'll go through these, and then I want to look at a couple of changes we made last time on organisation types, fine-tune that a bit, and then look at beneficial ownership and so on before we go on to look at other kinds of control and so on. So feel free to jump in at any time and take this into the various directions as you see fit. But I thought we'd start by just refreshing our memories with the basic stuff, and then, as I say, we've got the different questions that arise from that about what if it's not a company, what if it's not, what if the shareholder is not a company, and so on. So the most basic thing then in the world of incorporated company ownership, you have a shareholder. The shareholder is somebody that holds a share, and our share here can be any share. We originally had the CFI hierarchy of kinds of instruments and the ISO 20022 securities data model, which basically dealt in publicly traded shares, and we soon realized that once we start looking at business entities, we're interested in shares whether they're publicly traded or not, because you have director shares, you have non-public, non-listed companies, and so on. So the most general here, any share, the party, this little icon means some entity in some role, or what we call a party. In this case, the party is called a shareholder. The shareholder holds some stake, any shares at all basically, in some incorporated company. That's any company incorporated by the issuance of shares, be it public or private. And the inverse of that relationship, by virtue of the shareholder owning some shares, is part held, might be just a tiny percentage held, but it's part held by some shareholder.
Mike.
Okay, that's the easy bit. Yes.
Mike, sorry, can I interrupt you there? Sheila Jeffrey, you've raised your hand.
Yeah, and good morning. This is Sheila Jeffrey, Bank of America. Mike, couple of questions when I look at that part of the model. One is, I presume that's covering when funds are holding shares in companies as well, right? Because that would be the example of an incorporated company would be like the fund that would be invested in Ford or whatever. So there what you've got is multiple people investing in the fund and then the fund investing in the company. So there's a secondary relationship. I hold Magellan Fund or whatever it is, and then Magellan is invested in Ford, right?
Oh, yeah.
Well, you've got
so we have a sort of an indirect relationship that we haven't modeled.
So that's one thing that comes up for me, and then the other is the more direct problem, which is actually also incorporated in this problem with the fact that we have funds that invest. But if you take a company like Bank of America, we have millions of shareholders, and I don't know that we will ever really be able to track. And of course, a lot of this is overlapping with the discussions which are occurring in the LEI forum around the relationship hierarchy data and what does ownership mean and how do you actually manage it and at what threshold do you express interest and at what point do you recognize that the detail and complexity would just become basically impossible to keep up with. We can't look at every time somebody sells one share of Bank of America on the market, right?
That's right. So it may be a meaningful concept, but it may not be one that we're interested in.
Right, or we've got to look at some aggregate level of significance or something like that.
Yeah.
Yep.
Thank you.
Thank you. Let me talk about some aggregate level. Yes.
It's Phil Lee here. Can you hear me?
Yes, I can, Phil. Hi.
Hi, Mike. Just a point of detail. A shareholder, i.e. an owner of shares, may be a company or a person or a group of people.
That's right. Oh, or a group of people. Right. I want to come on to that because that's I've got a whole diagram to play with where I've sort of put all these kinds of entity on the screen, and the question is which things go where. That's absolutely. And I think also those same questions need to be asked twice. Once for ownership of any share, i.e. ownership, and once for ownership of voting shares, i.e. ownership with control. Are there limits to what kinds of things can own voting shares as distinct from any share? I presume not, but we do need to ask that question twice.
No limitation I'm aware of.
Thank you. Good. Let's just jot that down. So for two types of ownership, voting and any share, no limitation on what sort of thing can own either. That's what I've assumed as well. Good. So let's get on to the interesting diagrams, because I'd like to come back to these questions on a more detailed diagram. You'll see why in a moment. So I'll quickly run through the simple one
question,
first,
don't
and we'll
you?
go on to the next one. Yep.
Don't you need, on incorporated companies, don't you need the number of issued shares so you know how many shares constitute certain levels of interest or ownership?
Yes, definitely. We've got number of shares in issue under share, but that's not quite the same thing. If there are 3 or 4 classes of share, we don't have, and this I think is something that we should think about. I was wondering about this the other day, because on the proof of concept calls, we're talking about, when somebody provides data that just tells you a percentage or something like that, how do we capture the meaningful concepts based on assertions of percentage and so on? And the immediate question was, well, how do you get from the number of shares something holds to the percentage of ownership? For that, you actually need the aggregate number of shares in issue in all classes of share in that particular entity, don't we? So
by shares in issue, are you meaning the total number of shares in that class of share, or the number of shares by that shareholder? Because you've got it against the shareholder.
I've got it against the share, which means it's in that class of share. What we don't have, and which I think we need in order to meaningfully talk about percentages, is the number of shares summed up across the different share classes that one entity has issued. So they might issue 2 or 3 classes of share at an IPO or something. Some may be voting, non-voting, extraordinary shares with extraordinary voting rights, and so on. And I presume, this is a question I wanted to ask, and now's a good time to ask it. I presume that when somebody talks about something having an ownership of 25%, they're talking about an ownership across all of the share classes. Again, that's
no, absolutely not.
Go on then.
Well, first of all, there are to follow on from the point the previous speaker made. There are 2 share metrics. There's the nominal capital and the issued capital. Yeah, you need to know both of those to do this properly. So the nominal capital is the quantity or value of each class of share that is possible to be issued. Then the issued capital, the issued capital quantity of each of those which actually has been issued. Because you could own 50% of the issued capital and have have control, but that may only be 10% of the nominal capital.
Ah, yes, I know what nominal capital is, but I didn't realise that it was counted up when you look at percentage ownership. That is interesting.
Not. The ownership is derived purely from the issued stock at the point in time.
Yeah.
But you need to know what the nominal capital is, because if those shares are actually issued and taken up by somebody other than whoever owns control at the moment, then the new owner gets control.
Of course, yeah. If or any additional shares are issued from the nominal amount that can be, then this dilutes the existing. And how is that tracked, or what sort of information do people keep track of on that?
Well,
so presumably then, once you know the nominal capital and the issued capital of the company, if the issued capital changes, there will be a corporate action presumably accompanying that, and from that you can recalculate, if you know the holdings of a given number of shareholders, what their percentages become.
Yeah.
And that's as capital amounts rather than as numbers of shares, I presume. Is that right, or both?
Well, it's effectively both, because the capital amount is the face value of the share multiplied by the quantity in terms of capital.
Yeah, got it. Cool. So that's something we need to track for organisations. Need to deal with the temporality of that as well, because that will change over time. And the way I'm dealing with most temporal things is if something's accompanied by a corporate action, we'll just assume that after the corporate action, we end up with the then current state. So we need to think about temporality at a later stage. But any change in this is accompanied by a corporate action. So corporate action can pretty much change anything that we see as standing data, if you like.
Yeah, absolutely. You can have a corporate action to increase the nominal capital. You can have a corporate action to share split or stock split.
Yep, that's right. Yeah, so basically, although we have a whole separate set of model sections for things that vary over time, like prices and so on, for things that are affected by corporate action, I've taken the slightly simplifying assumption that anything that the corporate action affects will treat as standing data, and that's that standing data that changes as a result of the corporate action. So this would therefore be included in that. So I simply need to add those two facts. I can actually add them now. Might take a minute or so, but let's just do it. Good. Oh, the machine's gone a bit slow, but anyway, I was going to add those now. There we go. While this window misbehaves. And all of this is any incorporated company, because these two facts apply to any incorporated company. Subclassing from that is publicly issued capital for a publicly listed company, because not all companies are publicly listed.
While you're typing away, Jesse, see you've raised your hand. You're on voice over IP. Have you got any audio there? I take it not. If you can dial in, that would be great. If not, if you'd like to send me your question via the questions on the control panel, happily we'll get those responded to.
Lovely. I'll keep an eye on that. Thank you. Good. So, so this is the kind of questions I wanted to scare up. Is we started with the simple stuff of any shareholder in an incorporated company. Extend that then to voting shareholders, and this defines a kind of voting control. And those are the ones that we then are interested in for things like if the voting shareholder is itself another incorporated company, then we have the basis for things like part owner, parent, and so on, and potentially other kinds of relationship, or possibly relationships under here that are just defined as with a percentage property about them, saying. And this is something we want to come back to. It's still very live in the LEI discussions. Is 5%, 25%, any percent, etc., etc. These are the basic kinds of concepts. So part owner, and we haven't actually put any maths in this. It's really just in the definition at present. But a significant voting share, but we haven't said what's significant yet. But anything that is significant but not a majority controller, and then you have 50% plus one share as a a parent. I presume that a parent is the right term here. It's something that has ultimate control and is itself a company. So the questions this raises are two. Firstly, what if it's not a company but something else? And secondly, what if it's not voting shares but any shares? So here we have a couple of concepts which are not mutually exclusive. A beneficial owner, and again, I don't know if this is the right term, I'd like people's views on this, but something that's owned some stake, voting or non-voting. But when we talked about this last time, we came to and fro between whether beneficial ownership itself implied control or didn't imply control. But we have the concept of an ultimate beneficial owner, which, as I understand it, can even be a human being, it needn't even be an adult human being, and so on. That's what I'm a little bit unsure of. So I've done a diagram based on this with some possible kinds of parties or some kinds of entities that can fulfill this party role. So just before I look at that, that's a whole other thing, ignore that for the time being. So if a shareholder is a kind of owning party, which is a kind of party, there's a little wrinkle in the model here. So we said last time that we introduced this new concept of a potential party. That's anything that can be a party. So that's where this arrow should be pointing to. And I'll show you in a moment why it isn't, and we'll try and fix that. Because potential party is any formal organisation or legal person, is what we said last time. So not just any entity. But if the ultimate beneficial owner, let's find the right diagram here, if the ultimate beneficial owner can be a, here's a whole very big untidy diagram now, but going back to our ultimate beneficial owner down here, the assertion we had from our previous reviews was that when you go right back to the ultimate beneficial owner of an entity, that is any human being and need not necessarily be an adult human being. So you could have shares held in trust for a minor, for example. And that slightly breaks this thing where potential party has to be a legal person or a formal organisation. If the owner of a share, this is the distinction between a party defined in terms of rights and in terms of responsibilities. To be a potential party, to take on any kind of liability, other responsibilities and so on, enter into contracts or whatever, you're either a legal person or a formal organisation. But to own shares, you can be any human being, if I understand it right. And so that rather opens the question then of you know, what kinds of things can own shares,
well, Mike,
if anything
Mike,
can own shares.
Hang on a minute.
Yeah.
So surely it's true to say that a shareholder that is a potential party. It doesn't matter whether they're a person or a corporation.
Right, that's what I was wondering. So if we have potential party, should then be extended to include all persons, not just adult persons?
Yeah, if a minor holds shares, minors are allowed to hold shares, but legally the shares are considered trust by their guardians. Right. So the actual responsibilities with that go with the guardian or the trust or whatever, but the ownership goes to the human being. So then to be a potential party is to actually be any human being. If we extend potential party to that, then we can fix this wrinkle in the model. So that's what I wanted to clarify, is whether we've made potential party too narrow last time. So it can be any person or any organisation or any legal person. That relationship might be a bit redundant, and then we can put this back where it should be, which is what we agreed last time, that the party is potential party, and let's find this character. There we go. I'll just do that, get rid of the extra noise, and then so you see what broke before was when I moved this potential party, I had this shareholder being anything. Now potential party includes human beings as well. Then that fixes that. This is what I was hoping we would achieve here. So by extending potential party to any human beings,
then we've fixed that wrinkle. Thank you. That's fantastic. So then potential party, and then what we may want to do is for some kinds of control and so on, consider narrowing down what kinds of things can exercise different kinds of control. But in terms of ownership, to be an owning party, with or without control, for any owning party, you can go all the way down to any human being, any formal organisation, and so on. We might also want to consider, last time we extended our informal organisation a little bit, we had legitimate and illicit organisations, and you didn't have to be a formal organisation like a trust or a partnership or something to engage in various activities. And I was rather wondering as I did this whether our potential parties should actually include legitimate informal organisations as well. So, you know, tennis clubs, political parties, anything that open a bank account. If you can open a bank account, presumably you can own shares, right? So I'm inclined to include legitimate organisation in this potential party.
Yes, because a shareholder could be a person or a group of people or an organisation.
Good, that's what I was.
Usually, group of people in that context means husband and wife.
Oh, that's
because the husband and wife jointly and severally own all their assets, as you know.
Yes, of course.
Including any shares they buy.
Right. So that's not quite covered in the organisation yet. I have to figure out how to do that, because it could be important, couldn't it? It's the sort of thing you might want to track, or are we going into details that we don't care about? I suspect we do want to, don't we?
Probably on the periphery.
Right. But again, it's a meaningful concept. We should capture it, whether people then feel it should be in the issued standard or not, and secondly, whether they want to include it in any given application. Because again, any one application will only want to traverse one piece of this tree for whatever the use case happens to be. Good. So our potential party, it seems to me then that as we look at different kinds of parties that have, so at the moment potential party includes anything that can have rights and anything that can have obligations. And as we narrow it down, you know, ownership is a right, and so can extend to all sorts of things that need not have obligations, like minors and so on, and informal groups of people and partnerships. But when we come to obligations, again, husband and wife could have obligations just like a partnership.
For mortgage, typically.
Yes. Indeed, yes. Wow, which could be very important, yes. So there's all the more reason to...
And a pension. And...
Yes, so they can hold debts which are of interest in a loan model, particularly obviously retail loan models, mortgage pools where they may be the debtor for that mortgage in that pool. So yes, that is important. I will have to add that to the model. Yes, so the holding of liabilities. The only things that have rights and not liabilities are really minors, but good. So now we have a potential party. Now when we move down to looking at forms of control, we need to consider when this party identity relationship is narrowed down to the kinds of parties that must be able to have obligations, and perhaps there's a need for some extra thing in here, but we'll think about that when we come to it.
Mike, while you take a breather, sorry,
yes.
Jessie, who hasn't got audio, sent a question over. It doesn't relate to the actual topic, it's something on a different tangent.
What software am I using? I'm using Enterprise Architect. I'm using an old version because the latest version has a whole lot of terms parallel to the ones we have, and I am being encouraged to upgrade, but I'm keeping on this old version for now. This is Enterprise Architect version 7. They just released version 10, It includes a profile similar to what we're using. What we're basically doing is we're using a UML modeling tool, but the model is not strictly UML because each of the things you see here represents something in the web ontology language, namely an OWL class, an OWL object property, and so on. And these are simply rendered using the equivalent of similar UML constructs. So it makes a very UML-y looking diagram, but it ain't a UML model. It's a set theoretic model where each box shows a set of things of which something can be a member, and each of the simple facts that are in the box and the relationship facts that are these blue lines between the boxes represent assertions about a thing or properties of a thing, such that if it has that property true of it, then it's a member of that set of things. And so that, I don't know if that helps to clarify that. As part of the ongoing work with the OMG to define this as a formal standard, you should be able to run this up in tools other than Enterprise Architect. At the moment, it's just in Enterprise Architect. We will also be supporting web ontology language tools because we, thanks to the folks at Adaptive, they're able to create a semantic web format model to define the same stuff in the more conventional semantic web format. We use this because we want to be able to present simple boxes and lines, relatively simple boxes and lines, to a business audience rather than specifically a technology audience. So thanks, and feel free to drop me a line later if you want to know more about that. Okay, so shared ownership. So I haven't really asserted anything much around beneficial owner, so really I don't know whether we need to do more with that. And what we also haven't tried to do here, now with the control ownership, we talked about percentage thresholds and things, we talked about levels of ownership because that ownership comes with the ability to control a thing. Are we also interested in levels of ownership of shares in general as distinct from voting shares, or are we only interested in the ultimate beneficial owner from the point of view of what information we want to be able to track about things? And is beneficial ownership the right label for this? Because there was a bit of divergence of views as to whether the term beneficial ownership implied control as well or only meant ownership. And I've used it at the moment just to mean ownership, but that could well be wrong.
Don't know. I've got no idea what you mean by beneficial ownership.
Oh, okay. So maybe that is the wrong label then. What's the best term for somebody that owns any shares at all, regardless of whether they're voting shares, as distinct from what we looked at previously?
Shareholder.
Somebody that owns voting shares. Shareholder.
A shareholder.
Okay.
Shareholder holds.
Right. So perhaps we don't need this term at all.
Well, if that was supposed, were you trying to represent the kind of concept of indirect ownership by that?
No. Although to Sheila's question, we do need to consider that as well.
Yeah, separate, isn't it? Is this subclass of shareholder?
Right. So should the ultimate beneficial owner just be a subclass of shareholder? There's nothing in between.
Well, that's why I didn't understand what you meant by beneficial owner, because to me, the owner of a share is a shareholder.
Right. Does ultimate beneficial owner make sense?
Theirs is the name that goes on the share register.
Yep. So, from shareholder, does ultimate beneficial share owner make sense to people? Is it a term people have come across?
Yeah, Mike, it's Tom Brown.
Hi, Tom.
I agree that I've been in this business quite a while, and we do know the term beneficial owner. So it would really depend on how we're categorizing the shareholder, I guess is the question, at multiple levels, because obviously you can have a mutual fund, for example, and within that you have to define that from a legal perspective in certain entities, in certain jurisdictions, you have to say who the actual beneficial owner is of those shares. So it's more of a legal concept as far as are they entitled under that legal jurisdiction to own those shares.
Oh, so in other words, you compare that against any restrictions like Regulation S and 144A and so on to see whether they should be able to
Precisely.
own those shares. Right.
In addition,
So who's legally the owner of the share? Is it the fund or is it the fund member?
Right.
It is the fund, but the fund has to be defined at a level that would more or less reflect an individual person or entity that is allowed to own in that jurisdiction.
Okay.
and you have a question
So
there.
let me just get to the bottom of that. Right, I'll come to that question. Right, I just want to get to the bottom of this then. So in the case of fund, and this, it sounds to me like this beneficial owner thing talks straight to Sheila's earlier point about the indirect ownership. So if a fund owns some shares and some people hold a stake in that fund, who is presumably in that instance, the shareholder is the fund.
Yep.
Because there is, as Phil just said, the shareholder, there is one name and only one name against that share saying who owns it at that point in time.
Yep.
So if somebody then owns the stake, so this ultimate beneficial owner, is that not a fund scenario, but some other scenario where somebody is holding some shares on behalf of somebody, or what is it exactly?
Yeah, I'm wondering if we want to just have this as one line underneath the shareholder to define that in certain jurisdictions there is that beneficial ownership designation or approval. Because basically it is the fund. I'm sorry. I was just going to say it's basically the fund that owns it, but in certain, as we said, certain jurisdictions, you have to kind of reiterate the fact and legally validate that the fund is the beneficial owner and that it's not being, I guess, held in a shell for someone else.
Oh, I see.
It's more of a legal. Like a legal classification, if you will, or a legal approval or validation.
So it's not so much saying that the beneficial owner is some person, but it's saying the beneficial owner is not some person.
Correct.
Who happens to hold an interest in the fund, presumably. Right, that gets to the bottom of that. So beneficial owner is meaningful. I didn't delete it. I merely removed it from the diagram, so I can sneak it back. Now, does that term have any relationship at all to the ultimate beneficial holder concept?
Well, that sounds like the same thing to me.
Ah. So these could in fact be synonyms. Because, yeah, that's the point. A share only has one owner.
Right. Well,
what
I think
about the company?
Mike,
I think, yeah.
I think you've just established that a share has two types of owner. It has a true legal owner and it has a beneficial owner.
Ah.
So there's who legally really owns it and whose name's on the share register, and then there's the person behind that person, who benefits from the ownership of those shares.
in a mutual fund, which I presume is the example the previous speaker was talking about.
Right.
Correct. Yep.
Mm-hmm.
Cool.
The legal owner.
So the legal owner is typically the fund or the broker or whatever, or the bank even. And then the beneficial owner is the reason why that fund or bank owns those shares in the first place.
Right. So as well as asserting that the fund is the beneficial owner and the person is not, there are scenarios where you would assert that the person is the beneficial owner and the fund is not.
Yeah, there has to be. Because there's another wrinkle on this, which is beneficial ownership can be not just with one person, but with a group of people.
Ah. And that's again down to a informal group, a marriage, a club, etc., owning a share. Yeah.
Exactly, but I mean, I'm no expert on US securities law, but my understanding is that if any of those individuals holds more than a certain percentage, they have to file something with the SEC.
Right. Yes, and I think that's fairly universal. There's the interesting case, I think I mentioned last time, that many years ago now, the state of Kuwait, via the Kuwait Investment Office in London, owned a percentage of shares in British Airways, which was higher than they were meant to own. And in fact, I think British Airways or the UK, well, it was still a national corporation, haven't really thought about this and had to quickly put some statute in place or something. I can't remember the details, but yes, so the recurrence what happens when they're holding goes over a threshold. Right, lovely. So the term that I did have as ultimate beneficial owner was ultimate beneficial owner in the company rather than in the shares, so I wonder if these two terms are not actually connected. Is there such a thing? You talk about, who is the ultimate name behind, this limited company that has all these holding companies that hold shares in it, but who's behind them all? Is that what this concept is? Is that meaningful or not?
Well, if a beneficial owner can be a potential party, and potential parties can control the potential parties or own other potential parties, then it's covered, isn't it?
Let me just, sorry, just two things at once for a moment there. I just thought I'd put there for going back in. So, and I just noticed that Wesley Moore, who asked the question I was going to come back to, has jumped off. But so basically, you're saying that once we've covered these two kinds of ownership of a share, then that covers everything we need to know about, including the concept of an ultimate beneficial owner. Is that what you're saying?
I believe so, yeah.
Great, good.
But by the way, a synonym for beneficial owner is nominee shareholder.
Ah, thank you.
Sorry, I got that wrong. The shareholder who's holding the share on behalf of the beneficial owner is called the nominee shareholder.
Yeah.
Right, let's get that down. And that ties into Wes's comment as well. So let's get some synonyms and labels here. So the shareholder, make sure I get this right. The shareholder who, can you say that again, sorry?
The shareholder who holds shares on behalf of somebody, on behalf of the real beneficial owner, is called a nominee shareholder because they're holding them in name only.
Right.
They're not enjoying the benefits and they're not making the decisions. They're just the name on the piece of paper.
Ah. Now that answers the earlier mystery then about whether beneficial owner included the concept of control. it does. It's completely orthogonal to whether things are control or not control, because if there's control to be exercised, it's exercised by the beneficial owner. If there is control, i.e. voting shares, which most shares are. Right, so we have beneficial owner and nominee shareholder. Now, so where's his point? He says suggest registered shareholder and keep beneficial owner. A trust could be a shareholder with beneficial owners. That's Rosie Moore's point over on the questions queue.
Sheila Jeffrey had a hand raised just then. Sheila, you just dropped your hand. Was that answered? Or
no, I meant to raise it. Am I unmuted?
No, you're not muted. We can hear you. And also,
okay. Because the other comment I just wanted to make is the way I view this, and I mean, I'm being very basic here because I myself, have money in funds. It is my capital that was used by the fund to buy those shares. So that's why I'm the actual owner, right? And I do also get all these proxies that they ask me to vote on because my fund has put me into a given investment, right? And sometimes I'm asked to complete proxies and indicate around the funds themselves, and no, I think it's usually on the funds themselves. So there's this whole double level thing going on, but ultimately it's my money that and everybody else that's contributed into that fund that's being used to buy those shares that are actually designated as shares, right?
For a mutual fund, yeah.
Yeah.
Right, thank you for that clarification. I never know one kind of fund from another, so that's perfect. So if I've contributed to a fund, if it is a mutual fund, then I enjoy some of the benefits of ownership indirectly. Is that what you're saying? I'll just characterize that. So you mentioned that, for instance, you get...
yeah, well, for me, it's like, where is the source of capital that was actually used for the acquisition is who is the ultimate real owner, right? Which gets very murky because we think of ourselves as, well, we have the shares in the funds and then the funds invest onwards, but at some point, to the discussion that's been going on, the benefit of those investments is meant to accrue back to the people holding the shares in the funds.
Correct, but you're not the legal shareholder.
But we're not the legal shareholders, right?
And you're not the beneficial
so it's a custodial. It's a custodial type arrangement, right?
Exactly. So you are the beneficial owner, the legal owner.
Right, and they're the nominal owner as a trusted agent on my behalf.
Yeah, that's right. That's the nominee shareholder, and they have to abide by a very set of rules.
Which means there's actually two levels of legal contract going on. My contract with the mutual fund, and then the mutual fund's contract with the target that they've invested in. Is that correct?
Yeah, and those contracts will pass on the rights and obligations,
right,
in their contract. So they're, yeah.
Yeah, the share is an implicit contract in itself. But you're right. The other one is a contract between you and the fund manager or agent.
Right. Which is similar in a way to a trustee arrangement, is it not?
Very similar.
Because a trust can invest on behalf of the trust owner.
Yep.
Yeah. And again, when you say trust benefit, you mean the trust beneficiary, presumably?
Right. Which is interesting because we're seeing similarity of terminology then, right? A beneficiary and a beneficial owner.
Because in fact, in the trust
beneficial
case,
shareholder, right?
the beneficiary is the beneficial owner. And this is where if the ultimate beneficial owner, for example, or any beneficial owner is a minor, They might can be a beneficiary in a trust because they don't need to be a legal person. They just need to be a person. Okay, so now we can put that fund scenario in the funds model, showing the pass through of rights and obligations. That will take care of that. And is that specifically and only in the case of a mutual fund? The mutual fund is investing on your behalf, but actually passing on the I can't remember the exact names you use, but they're sort of corporate actions or meeting actions or other things that happen because you're a shareholder. You have the ability to vote on things. That's all passed through to you, right?
Well, yeah, it doesn't apply to a hedge fund.
Right.
but are there other agency type relationships where it would might apply? And I don't know enough about this because this is not my area of business expertise. But if I've got a relationship with a personal investment counselor, is that similar?
I think that
invest on my behalf.
My understanding is there's a fundamental schism between funds that invest on a pool of assets or funds that make specific investments on behalf of specific investors in specific assets.
Yes.
Right, but then there's also the scenario where it's not a mutual fund. I'm working with an individual or a company that is investment advisors, which is not constituted as a mutual fund. Is that not correct?
Presumably then you would still hold the shares directly, but perhaps hold them liable for any bad advice they give you. So they would be out of the chain of ownership and control of those shares in that company, I presume.
Okay, yeah.
Does that make sense? But yeah, I know little about funds, but it seems to me you've got funds where you see them advertised on the tube or somewhere. Invest in this fund, and you have a published fund strategy like emerging markets or high tech or whatever, and you invest in the fund based on their strategy, and they then invest in shares that fulfill that strategy. In that instance, presumably you're just getting a return on the fund, or do you also still get the rights coming through to you in terms of voting and things like that for the shares that the fund manager has chosen to buy?
That's a unit, so you can't get the voting rights or whatever.
That's what I wondered.
Shares,
yeah.
Because you only own a percentage of each one.
Yes, so then you don't get. That's what I was suspecting, but I know so little about funds that yeah. So specifically where we're talking about you get the voting rights passed through to you, it is explicitly and only a mutual fund, and that's part of what makes it a mutual fund. Would that be correct? We're getting well into the funds model here, but I think we need to in order to understand these kinds of relationships. So good. Right. So bit more work to do on funds, but you have beneficial ownership. We've clarified a couple of scenarios in which beneficial ownership applies. We've discovered more fundamentally that out of shareholders, you have the nominal and the beneficial owner, and that's true of any kind of share, whether it's voting or not. And we've established that the ultimate beneficial owner drops out at the bottom of that. I still have a bit of a question whether we ever talk about the ultimate beneficial owner of the company rather than the shares, and whether that's actually incorrect. And then Carol had a hand raised or something, I think.
You've got two things. I wanted to make sure that you'd actually responded to Wesley's question, which was about that matter. And then Sheila, you've got your hand raised as well again. So Sheila, your line is open, so please speak at will.
My apologies. I thought I had taken it back down. I'm not. I'm reversing how the symbol's working. My apologies.
Right, that's okay.
but thank you for checking.
Yeah, I have to figure these things out. Thanks. And Wesley's question, it says that he's left. Wesley, are you there in some form or other? No. So Wesley suggested registered shareholder as the. For some reason I wrote nominal shareholder instead. It's not. So that's really doing two things at once.
Sorry, Mike, I think you need to repeat that question so there are other people on the line can actually hear the question.
Yeah, sorry, yeah, I'm just mumbling. So, yes, so I read it out earlier, but I'll read it out again. Suggest registered shareholder and keep beneficial owner. A trust could be a shareholder with beneficial owners. That was Wesley Ball's point. He's now left. When I read that out last time, I added this extra class, but I seem to have called it nominal shareholder. Was that wrong? Should I have called that registered shareholder? Or is that are they synonyms?
Yeah.
What do you reckon is the best label for that? Registered shareholder or nominal shareholder?
Well, registered is correct because that's the name that appears on the share register of the issuing company.
Good. So that's clear and correct. So we'll go with that. Thank you. Good. I think it was where I was trying to type this in while doing something else. Registered shareholder. Thank you. Good. And they may or may not also be the beneficial owner, but the beneficial owner is a different concept. We've understood the concept.
Right.
Good.
I did just re-raise my hand if I'm.
Yeah, me too.
Could you just briefly, Mike, re-clarify the difference between a beneficial owner and an ultimate beneficial owner?
No.
Because I'm wondering if the ultimate beneficial owner has become what we're now talking about as the, oh, it's just changed, registered shareholder, nominal owner. No, I'm looking for some clarification between those two elements of the model or concept.
Right. Yes, good. So you have two types of owner for a share, the legal owner and the beneficial owner. The beneficial owner gets the benefits of the share, possibly because they hold it in a mutual fund, possibly because they're also the legal owner directly, or possibly because it's held in a trust forum or something else like that. The legal owner is the one whose name appears on the share certificate. Wesley Moore suggested registered shareholder. Somebody else suggested nominal shareholder, but that may have meant something different, and I put it in by mistake. So, so we're happy with registered shareholder. We're happy with beneficial owner. I don't know if there's such a thing as ultimate beneficial owner. From some of our early reviews, we got ultimate beneficial owner with a relationship not to the share but to the company. I.e., the company has some ultimate beneficial owner. Does anybody recognise that concept?
Well, Mike, it's Phil here. To me, the concept of ultimate beneficial owner is only relevant in the situation where Company A owns Company B, and Company B buys some shares in something, because then Company A, which owns Company B, is the ultimate beneficial owner of the shares that Company B bought.
Some shares in something, then Company A is the ultimate beneficial owner of the, and again, of the shares, not of the company, because this is any number of shares you're talking about, right?
Yep.
Okay, so this concept here of it being ultimate beneficial owner of a company is not recognised, but ultimate beneficial owner of some shares is, and that is via some ownership relation between the registered shareholder and some other entity that owns a controlling stake in that registered shareholder, where that registered shareholder would in that case be some company.
But
this
do we want
here
to make that distinction just on the basis of shares? Is that not true of any asset held by Company B?
Absolutely, it's true for any asset.
So where I'm going with that is I'm wondering if there are some of the concepts that embrace and include the shares, but they are broader concepts than just the shares. And are we modeling them at the share level, or should they be modeled at the next level up as a concept?
Right, thank you. And that's exactly what I wanted to get onto next, because I specifically dived into shares first because they're reasonably well understood, but there are firstly other kinds of control besides control based on shares, but also potentially, and this I'm not so sure of, other kinds of ownership. So a company that's incorporated by the issuance of shares is quite simple. It has shares. If you hold them, you own that percentage in that company. If it doesn't have shares, then it's not an incorporated company, it's something else. But presumably, A, some of those something else's can also have equity, and B, are there other kinds of ownership other than equity, i.e. other than share-based? Can you own some equity in a venture which is simply defined by some other instrument besides a share? That's very much what I would like to know next.
You mean like a bond?
Well, a bond doesn't give you ownership in the equity, it gives you a holding in the debt of that equity.
Correct.
Is that something we want to track as a kind of ownership relation? I guess it probably is, isn't it?
I'm not sure. We might go down a rat hole with that. I think we need to be very consistent and clear about a different use of the terms ownership versus control.
Exactly.
Because they are completely independent concepts in certain ways, in many ways. Yeah.
Absolutely. Yeah.
I mean, to achieve any form of control, you have to own something. But beyond that, it gets rather complicated quite quickly.
It does indeed. And, when you say to achieve any sort of ultimate control, you do. But, for example, if we look at control relationships, so over here we have, again, a party, we have a controlling party and a control party. We have, at the moment, that, and these are just existing things that have been in the model for a while now, some controlling party is some party, any potential party that has some control of some form of organization. Some form of organization may have legal control of some body corporate, some legal person, such as an incorporated company or legally incorporated partnership or something. But it's all vague. What we haven't really said anything about what we mean by that kind of control. We've just asserted that it exists as control. Now, there's also just to open this out slightly further, we have, if I can find the right diagram, we have this kind of thing. Responsible parties, corporate public officers, company secretary, chief executive, board member, non-executive versus executive board members. Now, these all exercise a kind of control, which is managerial control, but they are put there via a votes and approved relationship from some voting shareholder. Right. Not all the owners, just the ones that have a vote.
Correct.
Mike, can I interrupt you?
So a voting shareholder, which can be anything here, not necessarily a voting shareholding company, but any voting shareholder has this relationship to the board members whereby they vote and approve them. So they therefore indirectly exercise control, which is then directly exercised as managerial control by these human beings who have these party relationships of being some kind of responsible party.
Mike, before you go down another rat hole, you need to now separate the concepts of legal control from executive control.
Ooh, okay. Very good, thank you. Yes.
So legal control comes in three basic forms. You're going to love this. Okay.
Good. Exactly what I was after, yeah.
So the first type of legal control is de jure control, and that's where a person or group of people or a company owns more than 50% of the voting shares of the company. Okay, and that's the normal situation that people think of when they talk about parent companies.
Right. Even though that entity may not itself be a company, so it can be a de jure control. can be exercised by more kinds of things than just another company. But if it's a company, we call it a parent company.
De jure control rests with any potential party that owns more than 50% of the voting shares.
Yes.
Okay.
Yep.
Then the next type of control is de facto control, and that's the situation where they don't. Somebody doesn't own more than 50% of the voting shares.
Yep.
But they own enough of the voting shares to have effective control because they own more. They can't be outvoted by any of the other shareholders.
This is the missing one. Yes. They have effective control. This is how takeovers are done, isn't it? Because they have more voting shares
than any one other shareholder.
Than any one other shareholder, so they can swing the meeting their way with a 30% vote or whatever it happens to be.
Exactly.
Okay.
And the final type of control, and this is like really complicated. I'm going to get lost here.
Yep.
The final type of control is called deemed control.
Ooh.
And that's where a person or group of people or a company own more than 50% of all of the issued shares of any type, not just voting shares.
Yeah.
Or they own more than 50% of the common shares, the common stock. So in other words, they are the largest single investor in the company.
And being the largest single investor, people ask them before they do something in case they say no and take their money away.
Exactly.
That was fantastic.
Mike, I have 3 comments.
We've got managerial control and we've got this leg kind of control, but we hadn't got these legal nuances. That's exactly what we need. Yes, Carol.
Right, okay, three things. Sorry for those people who've been sending me information. Trying to interject is not always as easy as it seems. Mike Damas has sent me an email. Bondholder does not necessarily show ownership like equity does.
Yep.
Victoria Starr has sent a question over during that last discussion. Based on the explanation put forward, it seems that the ultimate beneficiary is redundant with the ownership concept of the legal entity.
Yes. Absolutely.
Okay, and then there's one more.
Let me just jot that one down because
Okay.
that's important. So, ultimate beneficial owner is. Can you say it again, sorry?
It's on the questions.
Is it? Oh.
Yeah.
Based on the explanation, it seems the ultimate beneficiary is redundant. Yes. It's the ownership concept of the legal entity, and I heard strong agreement from Phil on that.
And then I have one more.
Good. So we can lose ultimate beneficial owner as a concept altogether, is what we're saying, because it now becomes redundant now that we've better understood what was meant by beneficial owner in the first place. Excellent. Was there another?
Yep, there was another one, which has actually come through again via email from Wesley Moore, from Wells Fargo. He was on the street, so he wasn't able to speak previously.
Right.
His comments about shareholders, and I will read this out. There are registered and possibly unregistered shareholder in the case of bearer instruments. Don't know what countries still have the bearer instruments, and I believe they are no longer issued or outstanding in the US. They were more of a European thing, and he believes they're still issued in Eastern Europe. Registered shareholders, including fiduciaries of various kinds of holding shares for the benefit of a beneficial owner. Other types of beneficial owners are the minor in a UTMA, a Uniform Transfer to Minors Act account, the participant in a retirement account, and clients of an investment advisor, including funds. We also have the concept of street name, where a broker-dealer holds shares on its own name in an omnibus account for its customers, who hold those shares in their accounts and authorise the BD to hold their shares in street name. Street name is handy for making security loans and necessary for customer margin accounts, so the firm can liquidate shares if the market goes the wrong way. Street name, which are novated accounts, are in turn novated in depositories or held in the name of a depository as registered owner for the benefit of the street name accounts. And in parentheses, all of the BD members. Now, I hope that makes sense, trying to read that out on the cuff.
It does. I'll get it via the email and put the more detailed version in the notes, but hopefully I'll capture it. And that actually comes back to Sheila's earlier point about the investment advisor. So as well as the investment advisor giving you advice, they may also have an account in which to hold things on your behalf after all, which I hadn't realised when I responded earlier on that. So these are all scenarios in which there is a beneficial owner that differs from the registered owner. Fantastic. So all that detail of our beneficial owner, we've made our ultimate beneficial owner redundant. We've asked our questions about that. I'm going to put these notes on this diagram, even though they don't belong here, just so that I'm not losing track of which one was when. But I'll do my usual thing. I'll write the notes, the summary of what we discussed, and then I attach a little attachment with all the written notes so we don't miss anything. Good. So we've got the three kinds of control. That gives me the kind of clarity that we didn't have before: de jure, de facto, and deemed control. Presumably, this managerial control that's vested in the board members is another kind of control again, isn't it? Because it's not control of the company; it's simply management of the company. But these three forms of control give us three kinds of relationships that we're interested in as they apply between entities. So then the main question that's left to us is to ensure which kinds of entities, these different kinds of control, may or may not exist between, or which ones we're interested in, or anybody's interested enough in to include in the types of control hierarchies that we want to track in LEI and so on. So a few left over from the past, as you can see here, legal control. I'll replace these with the de jure. In fact, yeah, let's think about that then. So de jure control, these relations have been in the model a long time, and we've refined a lot of the meanings of these concepts since then. So does de jure control apply between any formal organisation and any other formal organisation, or between are we interested in only body corporate, i.e. limited companies and incorporated partnerships and so on? Do we talk about having de jure control of a trust or some other such thing, or are we only talking about it in relation to?
You can only have de jure control of something that issues voting shares.
Ah, right.
The definition of de jure control is the ownership of more than 50% of the issued voting shares.
Oh yes, that is. So that's a narrower meaning than de jure in the broader legal world of just anything that is de jure.
Correct.
Legally grounded.
Yeah.
So then, if this is de jure control, it can only apply to something that has shares in it, namely incorporated company.
Yep, including limited partnerships. Well, partnerships limited by the issue of shares.
Ah,
yeah.
Right.
Anything that issues shares, if you issue shares, you can be the subject of de jure control.
Right. So there's various kinds of legally incorporated partnerships. Some of them have shares, and therefore the share-related concepts apply to those as well. Some types.
Yeah, obviously in practice it's extremely hard to take over a limited partnership because the shares aren't traded. But that's irrelevant.
Yeah, because also there's also shares not traded in many limited companies, and so far
absolutely.
We've only talked about things that are universally true of all, but actually everything we've talked about in relation to shares also applies to those kinds of legally incorporated partnerships that have shares. Are there any that don't have shares, or or not?
Well, yeah, limited by guarantee.
Oh, good. Legally incorporated. I started looking at some of the facts around the different kinds of legally incorporated partnerships in the UK and the US, and they're quite different, and I didn't get to the bottom of all the details of them, but or by guarantee. Something I was actually wondering more fundamentally in the model is whether, where we had the concept of a company incorporated by guarantee, is that redundant, and actually it's a kind of incorporated partnership, or can you have many kinds of body corporate that are issued by the incorporated by the issuance of guarantees rather than the issuance of shares. So those
a partnership. In the UK, there are three basic types of partnership: limited by share, which is they're quite unusual; limited by guarantee, and organised through mutual contract. Yeah, so that's the typical partnership. When you think about
that's the one I looked at. Yes. Yep.
You think about a doctor's surgery or a veterinary practice or something like that. Yeah. Or a solicitor's. Those types of things.
Right. And that's.
Whereas limited by shares is something like the John Lewis partnership. Yeah. And limited by guarantee, they're quite unusual these days, but they were very common years ago.
Right. So I've got in the model the concept of a company incorporated by guarantee, and I've got the concept of a legally incorporated partnership, and I had been wondering whether there was some redundancy there or not.
No, they're all valid.
Look at that. So you can be limited by guarantee and not be a partnership. You can be a partnership and not limited by guarantee. So they're non-mutually exclusive categories of find a suitable diagram.
A lot of charities are companies limited by guarantee, by the way.
Right. Interesting. We also had a question about charities the other day, whether a charity is a kind of thing or a functional entity whose form can be one of several forms, and you've just suggested the latter.
Wait, it can be one of several forms. Charity can be almost anything, but I'm just saying a lot of charities are partnerships limited by guarantee or private company limited by guarantee.
Right.
Network Rail is another one, as a lot of student unions.
So there are kinds of company limited by guarantee which are not a partnership, so the model is correct, and there are kinds of partnership which are limited by guarantee. There are kinds of partnership limited by shares. I wonder if I was to interpose a kind of anything limited by shares, all of the relationships we talked about of necessity apply to all of those, so they're not only the ones that are. So if you've got a partnership incorporated by shares, you see I haven't refined this down into the kinds of limited liability partnerships that can exist. I've just put some description in here. And yes, the ones that are only defined by contract is partnership, because a partnership is a kind of formal organisation, and a formal organisation is anything with a formal contract between its principles, such as trust deed, partnership, and so on. The legally incorporated ones, we then can extend that then to guarantee versus shares. Then the share ownership relationships we talked about would apply equally to those, right? In full, pretty much.
Yeah, they're all a wash. Yeah.
Sheila Jeffrey, have you got a comment as well at that point?
Yeah, I don't want to pull a red herring out of this, but I was intrigued recently in association with the legal entity identifier work. There was a suggestion that the organisation for the LEI should be founded in the UK under Royal Charter. So I looked into what Royal Charters entailed, and when we start talking about control, that actually moves a lot of control into the Privy Council of the UK government, which is another whole. I don't know if that's got any relevance to this discussion.
It is relevant to the more general discussion of kinds of entity, because something else I didn't know about Royal Charter. I certainly didn't know the LEI was going that way, but there's a bunch of things. We've briefly talked in the past about sovereign. I'll come back to that. But
Right.
also, out of the kinds of body corporate, so far in body corporate we only have incorporated company, company limited by guarantee, and legally incorporated partnership. And clearly some of these are not mutually exclusive, some of them probably should be. But then I was reading about the recommendations that are not being implemented around the Leveson inquiry into press and media standards. And the kind of option that was suggested suggests to me something very similar to what you're saying, possibly even the same, which is that under certain legislation, the Parliament may create a legal person, which would be the person of, say, the regulator in this example. And so there we have a kind of legal person which is not incorporated by issuance of shares or indeed by, so in body corporate generally it's created by some instrument. But in this case, the instrument is an act of Parliament.
Yeah, that's right.
And the broader context is, I presume that's not just unique to the United Kingdom. I presume it's a potential model that could apply in other globally, other jurisdictions.
Yes, anywhere that, in other words, the instrument is the statute which creates the entity.
And Royal Charter is not actually an act of Parliament, it's an act of the Privy Council, which is representative of the Parliament, which is even a little more subtle.
Well, it is.
That's my next question, yeah.
Or did I misunderstand that? I only looked at it briefly, I do have to admit.
That's correct. So in addition to companies that are incorporated through Acts of Parliament, you also have companies founded through Royal Charter. Yeah. For example, in the UK, anything that starts with the name Royal Institution or Chartered Institute will have been incorporated through Royal Charter.
And those can be charity or trade associations as well as companies.
Absolutely.
Right.
Lots of universities. Nearly all universities are founded through Royal Charter as well.
And of course the early universities, certainly any early universities in the Western world, when it finally caught up to higher education back in the 12th or 13th century, were all Royal Charter, were they not?
Yeah, I mean, it's important to realise that certain other things like the Bank of England and the BBC are incorporated through Royal Charter.
Right. Now, we can extend this to other jurisdictions in two ways, because what it comes back to is how power is exercised in different kinds of jurisdiction. We talked about sovereign as a kind of entity, and we talked about some future work on things like governments and so on that are agents of that sovereign. So all government materials in the UK or in Canada, for example, will have Crown copyright at the bottom, because in a kingdom, the sovereign is vested in the person of some human being, which is the Crown. In a republic, the sovereign is the people. In a principality, the sovereign is the prince or the emir. So the United Arab Emirates is a set of principalities. So in anywhere where the sovereign is not the people, presumably there can be the equivalent of the Royal Charter. So in Holland, in Denmark, and so on, in the Kingdom of Saudi Arabia, and so on, the king can create things, the Crown can create things by Royal Charter. Presumably in England, it's the Privy Council that does that on the Crown's behalf, because we don't like the Crown going around misbehaving and doing stuff. But in other kingdoms, that may not necessarily be the case. And so there we have. Now, is there in a republic where the people are sovereign, the equivalent of a Royal Charter, i.e., equivalent of creating things outside of act of the legislature, or is it only in kingdoms and principalities that something outside of the legislature can create legal persons?
I can't find any examples, but there's plenty of US people on this call.
And Sheila, have you
Presuming
got a comment on that? Because you've got your hand up again. No, don't worry if not. That's fine.
Sorry.
The old toggling hand.
Yeah.
I've got several calls I go on with different software. If only there were standards for these things. The Ontology forum has this toggling hand thing that if you type something in the wrong place, your whole question appears under the hand. It's very weird. Anyway, good. So that's some of the loose ends on kinds of entities that I've been wondering about. And I did not know about the Royal Charter and the Privy Council. I thought it was only statute that creates entities.
No.
But we certainly know that in at least one kingdom, and presumably also, therefore, in Canada and Jamaica and Australia and so on, the same sort of thing can happen.
Oh yeah,
Commonwealth.
and lots of other countries that have sovereigns, like Belgium.
Right, which have sovereigns that are a crown rather than people. You mean every country has a sovereign, but in a republic it's the people.
Correct.
Other countries where the sovereign is some person, crown, this can happen. Great, and I'm pretty sure that, as I say, some of the less democratic kingdoms, like Saudi Arabia and Swaziland, to pick two at random, doubtless the king can do whatever the hell he likes. So, including creating entities, until the World Bank came along and made everybody privatise everything. Of course, it's pretty straightforward. That the national railways are owned by the state, and the state is owned by the king of the kingdom, and that's that. Yeah. Good. So that's been a nice little diversion into some of the stuff that I have been wondering about and have been loose ends around sovereign and so on. I can model some of this up. What I'm going to suggest is that we have the December draft coming up. I've been doing a lot of work behind the scenes to repackage the model, get all the stuff we've been doing into the right places and so on. It's very tight, but I'm aiming to try and have a subset of what we talked about ready to look at, and after this next week's ONG meetings, we'll look at formally creating machine-readable files and all sorts of interesting stuff like that. So I'll model as much of this as I can in that draft, and any loose ends around the government and sovereign side of things, because we've got the whole concept of municipalities and government agencies and so on, we'll come back to as part of the next phase of work to get into the February draft, which is not very long away. So I think we're in a good place to get all of this kind of stuff into the model. I've clearly got a lot more work to do on funds. The work we talked about a couple of weeks ago, I've still been working through that. Still got a few changes to make. Some of the clarifications today actually will feed directly into that. The whole beneficial ownership side of things now suddenly becomes very clear. That means I can define the basic relationships we're interested in, put as many of them as I can into this first draft, and see what questions are left over. I'll redispose control into those three forms of control. That's specifically in the context of anything that has shares in it. Other kinds of control are more general than that. As you see, there's still a few of these relationships hanging around that may be too general or may not be, but we've moved this one to where it should be. This is its inverse, so in fact I should move that one as well. Then I think we're in a fairly good place. Anything else, any loose ends that we need to pick up before we go our separate ways for the day? Anything else in the question queue? No. Okay, so it's 10:30. Any final comments or things people would recommend to my attention, or things you feel we've missed? We didn't talk much about percentage thresholds and stuff, but I think those are fairly well understood. Well, anything else before we go? No? Well, thank you all very much. It's been an excellent session. Sorry it took me so long to write last week's notes. They are up on the website. I'm still updating the observation log, which I'll also update with this week's stuff. I'll get these notes turned around, get the diagrams updated on the website, and what I'm going to aim to do in the document, the December draft, is So those things that we've actually gone through, do some nicer diagrams, little explanations next to them, and start to have a more narrative style of standard document that we've had in the past. So it should be easy to follow the results of all of these conversations that we've had and the model that's we fine-tuned and arrived at from that. So thank you all very much indeed. Feel free to email me with any additional comments, and keep an eye on the website. I'll try and get these notes up today or tomorrow. Oh, and don't forget later on, and if you're not in circulation, let me know. We have our monthly update progress call for the OMG Finance Domain Task Force and FIBO standardization work. That's at 1:30 Eastern Time. I'm just going to send the notice out right now, but if any of you on this call haven't been on those calls and would like to track the more technical standardization work with the OMG, drop me a mail now and I'll make sure that you also get the invite for that, and then I'll speak to many of you at 1:30 Eastern Time today.